Thanks for having me. I really appreciate the opportunity to get in front of you all. I know many of you, but for those I don't know, Joe Roberts, Roberts Insurance and Investments. We're out of Richmond, Kentucky. We're a family business, like I said. It's hey, all right, friend. But and also, I just want to say thank you to Patterson, too. You all have been awesome to work with. You all just put together this amazing group. And I tell everybody, like, man, this SDBO group is really something. Like, how enthusiastic you all are to learn and what you all are doing. This is just an incredible group. And I'm really excited to see the growth of this group throughout the years. So be proud that you're a part of this. I know you are, but it's really, really awesome thing. So, a little bit about us. Again, family business out of Richmond, Kentucky. We have been in business for 51 years. My dad started the practice 51 years ago in January, which is something we're obviously very proud of. I would say for about 30 of the past 51 years, we've specialized in the medical profession, and really even more tailored to the dental profession. So we have dentists in almost every state in the entire country. And those are our clients, those are our people, and that's who we work with. And I describe myself as a financial advisor. So a financial advisor can encompass many things, right? I do everything from my dentist from disability insurance to life insurance to investments, financial planning, retirement planning, and like strategies to pay off loans, a lot of those things. And then also my brother was going to be here today. He's part of the business, obviously. He handles malpractice insurance and insurance for insuring your own practice one day, which I know is something that would be very important for you all. But my brother is coming off of back surgery about 3 weeks ago, so up to the last minute he was planning on coming. I had a little stool for him he was going to be able to sit on. But he just couldn't make it. There's no way he could stand up here and do this. So anyway, we just know that we handle those things, and that I'm sure you'll be hearing him at some point talk about that. But again, what I do, mainly disability insurance, life insurance, investments, financial planning. But what I'm going to focus on today is by far what I think is the most important thing for you all as dental students to know about and pay attention to, and that's disability insurance. What I believe is that I take our clients and focus on their top priority at first. Top priority being disability insurance. And then as you grow, as you come out and start working, as you own your own practices, then we can worry about some of those other things that we mentioned. So I don't like to throw everything out at our clients at once. Let's just focus on what's most important at this point in your all's life. And by far, as dental students, it's disability insurance. Quick story, and I'm going to I give a few examples tonight, and I feel like those are powerful, and I've been doing this a while, and I've worked with a lot of dentists, so I'm just going to share some things that I've been through as far as disability insurance goes. And please keep this interactive. If you all have questions, please just stop, and I'll answer questions. So every time I'm in front of a group of young dentists, I'm reminded of a certain situation that happened about 8 years ago. We always present to the fourth-year management class. So some of you all have heard this before. But there was a guy sitting in the very front row. He was very enthusiastic, raising his hand a lot, had a lot of questions. And after John and I were done presenting, he came up to us and he said, guys, can't wait to work with you all. I'm actually already in the process of buying my own practice. And, you know, don't see that often right out of dental school, but he had it all set up, and sure enough, within graduation, he was starting in a couple months, owned his own practice. Fast forward about 5 years, and he owned his second practice, and in the meantime, also, he got married, bought a house, and had a couple kids. So he's doing great, obviously. But about a year after that, he noticed that he started to have some numbness in his hand, okay, just ignored it like anybody would for a while, but then that continued to get worse. And then really up to about a month after that, the numbness, he started to develop a tremor. After about 5 months, he could not hold an instrument without his hand shaking like that, just uncontrollably, just came out of nowhere. And unfortunately, he, at that point, couldn't be a dentist anymore. And he had to sell his 2 practices. So it's a sad situation that he was no longer able to continue dentistry. However, because he had the right disability policy, and I'm going to talk to you all a lot tonight about what the right disability policy is, okay? But because he had that, he was able to take another job. It's actually a great job. He is the dean of a dental school out in the western part of the country. He just moved his family out there. And because he had his disability policy in place, he was able to do that. And he's happy as he could be. I talk to him quite often, actually. But the thing about that story is, of everybody in that class that day, my brother John and I talk about it, he would have been the last guy in the entire group that I would have guessed to have ever had a disability. He was super healthy. He ran marathons, I found out later. He worked out all the time. But, this happened to him, right? So, the one thing, whenever I'm working with my doctors, the first thing they say is, I doubt I'm ever going to need this, right? And everybody that I've worked with that's ever had a disability claim never thought they would need it. And really, I hope you all never need your disability policy. But fact is, it can happen. And the fact is, like 1 in 4 people under age 40 have some type of a partial or total disability they deal with at some time in their working career. That's 1 in 4 under 40. So it's a big number. But that is why I think disability insurance is most important. A lot of those things that I talked about, investments, super important, but I always tell my clients, we have to prepare for the unexpected before you can plan for the future, right? So you have to take care of that first, and that's what disability insurance does. And really, as you all sit here today, your biggest asset, like I always ask my doctors, like, what do you think in 10 or 15 years will be your biggest financial asset? And I hear a car or house or practices. I definitely hear that a lot. But really, let me get forgot about this. Oh, you all, I'm going to have to go through all John's slides. I had them all prepared, and, I told you about that. This is, though, a list of everything that he handles as far as insurance goes. But let me go through all this. Sorry about this. I should have done this already. This gives you an idea of, those are all lawyers that sue people. That's why you need malpractice insurance. Get through this. Okay, here we go. So, what I was getting at, I don't know if you all can see that number up there, but what is circled? $15 million, $15.5 million. So, what I was getting at is, as far as financial assets, what would be your biggest? Well, it's not houses, it's not cars, it's not practices. What that is that is a 30-year-old dentist, if he or she were to make $250,000 a year, by the time they are 65 years old, adjusted for inflation, would have earned over $15.5 million during that time. That is a huge number, obviously. That is what disability insurance does. It protects that number. So doubtful any of us are going to have assets worth that. You may not see that right this minute, but that's what you're looking at. So you've got to protect that first thing. Okay, so I always just show people that number. Just puts it on paper. It's obviously just a massive, massive number that you have to protect, and that's what disability insurance does. So I had a lot of things I didn't want to skip over. All right, so the thing about disability insurance is that it can be a little confusing. I mean, a lot of you all I've talked to about already. It's all wording and definitions, and so you really have to know what to look for. So what I want to do today is just kind of simplify that process for you. I'm going to go over exactly what you need to look for when you're looking for a disability policy and just kind of focus on the key components of a good disability policy, okay? So, does anybody have any questions? Yeah? Okay, so the first phrase that you have to make sure is on your disability policy. Non-cancelable and guaranteed renewable. What that means is if you have a non-cancelable and guaranteed renewable policy, and again, all these policies are wording and definitions, but this is a phrase you've got to know. That means that Your costs can never change. The policy limits can never be changed. Basically, you have all the control. The insurance companies have no control if you have a non-cancelable guaranteed renewable policy, okay? So disability insurance really broken down, it's just a promise to pay from an insurance company if something were to happen to you, right? Well, these disability policies are put together by really ultra-smart insurance companies, and the wording and definitions are extremely important. Not that anybody's out to sell you a policy that's not going to pay, but you have to make sure that you're getting the very best that you can. And the key is that you have to get this policy early. If you get out, and I'm going to talk about this in a minute, but I actually think that nobody should finish their 4th year graduate dental school without having their disability policy firmly in place. A lot of the other things I talked about might come a little later, even like John talked about malpractice insurance. That's when you start working. Or if you're going to residency, you don't need to worry about malpractice at all. But disability insurance, whether you're going into residency, no matter what you're going to be doing, you need to have that locked down before you graduate. And I'll talk to you a lot about the reasons for that. But again, if you have this wording on your policy, you have all control. Okay, what you want to watch out for, well, clicker stuff, right? Other way, there we go. Okay, thank you. So, this is something you got to watch out for. I took this phrase, you see, it says your coverage may be canceled or changed in whole, in part under the terms and provisions of the policy. I took this exact sentence from a large corporate dentist office that you all would all know. They offer a disability policy to all of their dentists, okay, that has this phrase on it. Your coverage may be canceled and changed in whole or in part. If you have a non-cancelable guaranteed renewable policy, you would never see a phrase like this. But what this means is that they can change the benefits on you, really without even telling you. We saw this a lot at the beginning of 2020. So obviously a lot of dental practices had to shut down, right? During that time, they wanted to decrease their expenses. Well, one of the things, unfortunately, that we saw is all the doctors that had a group disability policy, not just from this company, but we saw it from quite a few. They were decreasing the benefits of the disability policy in order to keep costs more in line while they couldn't see patients. So doctors that were starting off in early 2020 that had a certain amount of disability insurance, by the end of 2020, after they made changes, didn't have near what they thought they did. Okay, so, but if you have a non-cancelable guaranteed renewal policy, something like that can never happen. Now, okay, great. So, kind of getting more into that, as you're looking for disability insurance, you basically have 3 choices to get a policy. The first is that you could say, hey, I'm going to wait until I start working, and then maybe my employer will provide a policy. A lot of corporate dental offices will provide a group disability policy for all their doctors. So that's one option. Your other option is you could say, well, I'm going into residency, similar situation there. A lot of times residency provide group policies for their doctors. Or your other option, and by far your best, is to purchase a disability policy on your own, tailored specifically to you, tailored to your exact job, your exact income, and your exact health, okay? If you do that, if you purchase a policy on your own, your policy goes wherever you go. If you get a policy through your employer, then think of your disability insurance at that point like a company car. I mean, you've got that policy for as long as you're there, then as soon as you leave, you no longer have your disability policy. Then really, you've got some problems, because at that point, if you try to get a disability policy, let's say, for example, it's 10 years later, well, at that point, it's obviously much more expensive, because disability insurance, the younger you are, the less expensive it is. So that's another really important reason to lock it in at an early age. But then, so obviously you want to that's another reason why you don't want to wait until later to get a policy. The other thing is, though, what if something's happened to you health-wise during that time that you were with the company? At that point, you would come out and apply for a policy. And I want to talk to you all a little bit about applying for a policy, what that looks like. But you would apply for a policy, and at that point, possibly you couldn't get one because of something health-related, or you could see what may be an exclusion on the policy. And this is something that we see often, is that if you've had something pre-existing that has happened to you in your lifetime, it's possible that these insurance companies will put an exclusion on your policy. So the younger you are, normally the healthier you are. We've all just been sitting here talking about things that our family and that we've dealt with as we've gotten older health-wise. So not only you're locking in the price if you get it at a young age, but you're also locking in your health. And the other thing is employer-provided policies, like if you were to do that, those are not comprehensive policies. What they say is, okay, all of our doctors have the exact same policy no matter what. They're all covered for the same amount. The details of the policy that I'm going to get into, that's where you see a lot of changes. You want the most comprehensive policy that's going to pay you in as many situations as possible if you become disabled. Group policies are not like that. They're just kind of like, hey, you've got disability insurance, but when the rubber meets the road and you have a claim, you want to make sure you've got the very best policy you have. You have a question?
Yeah, if you purchase your own insurance, and so you get hired by an employer, dental practice, and provides insurance as well, do your benefits stack on top of each other if something happens?
Great question. So I don't know if everybody heard that, but he's basically saying if you get a policy on your own, then can you add the employer's policy on top of it? Is that kind of what? So absolutely you can do that. But the key is you want to get your individual policy in place first before you take that job. And a lot of times, a lot of hospitals will automatically, even if you want the disability insurance or not, they give it to you. Like it's just part of your overall package. If you were to take that group policy first and then try to get an individual policy, the individual policy would say, well, you've already got this much coverage and your income is this, so we can only offer you either a small amount or possibly not any more insurance at all. Even though that group coverage isn't as comprehensive and as good, the companies have to look at it as overall total amount of coverage that you've got. So if you've got your individual policy in place first, you've got the best, most comprehensive policy you can, and then if they add something on top of it, that's fine. But it's just key to have the best policy in place first. Great question. So again, 3 options. There's really only one though. Get a policy on your own. All right, disability policies, they all have what are called optional riders. A rider is a way to enhance your policy. It's something that you can add to your policy to make it better. We work with companies that offer as many as 15 to 20 riders that you can add to your disability policy. Problem is, the more riders you add to your policy, the more expensive the policy is going to be. So what we always tell our clients is, we're going to make sure you have the very best policy that you can, but we also want to make the cost as affordable as possible. So what I want to do today are talk about the absolute must-have riders on the policy. Okay, other than that, it may depend on your particular situation. So I know a couple people I've already talked to, we went through the whole list of all the optional riders, decided which were best. But these are absolutely on every policy I work with, okay? So I'm going to talk a little bit about these. The first phrase, own occupation. So right up there with non-cancelable, guaranteed renewable, you want to make sure that your disability policy, it has to be what's called an own occupation. So like, remember non-cancelable, remember guaranteed renewable, absolutely remember own occupation. What that means is if you become sick or if you get hurt, and keep that in mind too, disabilities are sicknesses also. In fact, 75% of disability claims are sicknesses. Everybody thinks it's, you get hurt in a wreck or you get hurt doing, water skiing. It's not that. It's actually either of those things. But if you are a dentist and you become disabled and you have an own occupation policy, it gives you the option, if you cannot do your exact job as a dentist, you can go and get another job, like the example I used at first with my doctor that is now the dean of a dental school. Because he had an own occupation policy, he was able to take another job, okay? The other option beside own occupation is what's called any occupation. So there's own occupation, any occupation. I didn't even put any occupation up there because I don't want you all to even know. Just know that that's what you don't need. In that situation, any occupation says if you take another job while you're receiving disability benefits, then all benefits are cut off at that point. So you cannot do anything else. The example that with my guy that's the dean of dental school, like, he was completely healthy. He just had this tremor. He couldn't hold an instrument anymore. So he had the freedom. Like, I talked to him a lot, and he's like, thank goodness I had an own occupation policy so that I had the option to go and do something else. If you have an any occupation policy, you can't. If you do anything else, benefits stop. And I will tell you that a lot of employer-provided policies, like what we were talking about, they are any occupation policies. So the only own occupation policies you find are the individual policies that you would get on your own. Okay? Own occupation. You got to make sure you have that. Okay. So, going on to the next rider. I would consider the partial disability rider by far the most important rider. 80% of all disability claims, 80% are partial. That means everybody thinks like, oh, something happens to me, I'm in a wheelchair, I can never work again. Not the case. 80% of disability claims would look like you're working for a while, something happens to you, you can't work for 6 months, then you go back to work. Partial disability claim. Or even more common than that, say you continue to work. Say you're working 40 hours a week. Something happens to you, you have to go down to 20 hours a week. That's a partial disability claim. That's what happens most of the time. Most of the claims that I deal with are situations just like that, to where you're down for a while, then you get back to work. Really good example of this one is very close to my heart. So my wife is a pharmacist, and I guess about 8 years ago, she started having back issues. We've talked about back issues all night. It's crazy, but she was on her feet a lot. Nothing in particular happened. She just started having problems. Well, she ended up having to have back surgery, and she was off from work for 6 months. Couldn't work at all. Now, Kroger was continuing to pay her a little, not very much, but her partial disability rider kicked in from her disability policy, and it was like she was working full time until she got back to work. So, that was obviously a very important thing for our household, that her income, we didn't take a big dip when she couldn't work. And now she's back to work, everything's good, she's had to have surgery, but that's a good example. Another example, I just talked to one of my dentists 2 months ago. She is down in Florida, took a bad step off a boat, shattered her foot, broke it, and she's been on a scooter, like you were on that, right? So she was on that. She never stopped working, all right? Kept seeing patients the entire time, but she obviously couldn't see as many. Slowed her down, right? So her partial disability rider kicked in, and now she's back working full time. Everything's great, but she continued to work. She just couldn't work as much. So because 80% of all claims are partial, you have to make sure you have the very best partial disability rider that you can find. This is where I see a lot of differences in policies. There are companies out there that offer disability insurance policies that say, we've got partial coverage, but it's not very good. They'll say that your income has to drop a certain amount, like 50% or 75%. The good policies, the companies we work for, say your income only has to drop 15%, right? So that's where you see a lot of differences. Any employer-provided group disability policy is going to put a high number on that your income has to significantly drop. Individual policy is not the case. Like I said, it changes those 15% before you became disabled to now. So, I mean, that's like seeing a few less people per week, right? So just know, partial disability is really expensive. Don't just check to see if your policy has it. Make sure it's the very best, most comprehensive partial disability rider you can have. Does anybody have any? Yes?
Probably not going to happen, but does maternity leave or being pregnant fall into this category?
So glad you brought that up. She asked about maternity leave. So I meant to get to this. So what I'm talking about today is long-term disability. Long-term disability is defined as it basically starts paying you after 3 months. And if after that, it will pay you till usually age 65 or 70. So you will receive a benefit every month. It's a tax-free benefit. I'll talk about that a little bit. But it's long-term. It can pay you for multiple years. Maternity leave is usually covered under short-term disability. Short-term disability policies pick up after 7 days, and they cover you for 90 days. So it dovetails directly into long-term disability insurance. But you cannot individually go out and find a short-term disability policy on your own. Short-term disability policies are only offered through group plans, like employer plans. So you don't want to use employer plans for long-term policies, but short-term, it's something to ask. Like when you all start talking about where you're going to work, you want to see if they offer short-term disability, because that's where most of your maternity coverage comes from. Unfortunately, no company offers to where you can just individually go out like you can your long-term disability policy and get coverage. So, I mean, just keep that in mind when you're looking at jobs. Like what type of benefit package do they offer? Long-term, hopefully you've got that covered on your own. Short-term, maternity leave. So, glad you brought that up. Good question.
If you own your own practice, can you get it then kind of through the practice that you own?
Yes, great question. So Rob said if you own your own practice, then, so absolutely, then you can get a group policy for maybe not just the doctors, but everybody in your policy. That will be a short-term policy that everybody that works there after a certain amount of time is included on the plan. So, and those policies are usually pretty inexpensive. And then once you've had your practice for a while, you want to start adding benefits. That's one of those. And usually the benefits are grouped as like short-term disability, and they throw a little bit of life insurance on there, the companies do, and they just offer it to everybody. So once you own your practice, absolutely, it's a great benefit to have for all your employees. Sure. Any other questions about that? Okay, that was partial disability. The next rider, a lot of disability companies, I shouldn't say a lot, maybe three of the insurance companies, and I'm gonna say that too. There's multiple insurance companies that offer disability insurance, but I would say there's only 3 to 4 that I would consider, for lack of a better word, players in this market for you all. 4 companies that have the type of policies that you all would want, the most comprehensive. There are other companies that specialize in other professions, but for you all, as dentists, about 3 to 4 that you would want to look at. All those offer what is called a student loan rider. So what this does is if you become disabled, it's going to give you an extra lump sum of money on top of your base benefit. So your base benefit is there to protect your income, right? So a lot of insurance companies is graduating 4th years, they're going to pay you out $4,000 or $5,000 a month automatically before you make any money at all. They're saying as a graduating dentist, we're going to pay you out a certain amount. So let's say $4,000, for example. It's very common for these companies. So that $4,000, that's to replace your income. But what if you have loans? All my clients have loans, obviously. So you don't want to use that $4,000 or most of it to make loan payments. So what the student loan rider does, it gives you an extra lump sum benefit on top of the base benefit that you can make loan payments to. Okay, so a lot of times that's $1,000 or $1,500 extra, sometimes $2,000. They will give you that will just help you make loan payments. Then you get close to paying off your loans, and once you pay the loans off, you can always take these riders off. So I've got some doctors that are super aggressive in paying off their loans. They call me, they say, we need to remove the student loan rider. That's great. You can always remove riders. That's not a problem. The problem is adding riders once you've already got a policy in place. If you add riders at that point, every time you add something, you have to answer health questions. And the way we want it set up is that you answer all the health questions initially when you first apply for your policy. Everything's done. And then once that's done, you never have to answer another health question. So no matter what happens to you later, we've got all the riders you need. You want to get those initially in place. But student loan rider is something, everybody has student loans. This is something that's offered from the best companies, so just know that it's out there.
With the student loan rider, do you, does the disability claim, would it go to whoever holds the loan, or does that come to you and you pay it out?
Great question, Austin. So there are some companies, their student loan rider, they want to know who holds the loan, and they send those payments directly to that loan company. There's other companies, the ones that I prefer, that actually just send that money to you. So if you've got a $2,000 student loan rider, they're going to pay you the base benefit, say a $4,000, and then they pay also an extra $2,000 to you. You use that $2,000 to pay your loans or whatever it may, it's nice to have the discretion to do with that money as you want. It's for sure for your loans, but I really like the option of them sending it directly to you instead of straight to the company. So that's another really good example of companies being different, doing specific things that make it a little bit better policy. Good question. Any more about that? So we've got own occupation, partial disability rider, student loan rider. The next rider, inflation. That's all I hear about these days is inflation, right? So what this means is that if you become disabled and, for example, again, you're receiving benefits of $4,000 a month, that $4,000 is great, but it can pay you, these policies pay you till you're in your mid to late 60s. Well, $4,000 now is worth a lot more than that's going to be 20, 30, 35 years from now. So if you have an inflation rider, it's going to automatically increase that monthly benefit each year, usually 3% compounded every year that you're disabled. Okay? So, and a good example of this is my dentist that developed the trimmer. I refer to him a lot, but I haven't had anybody yet that's used as much of their disability policy as he did. So he became totally disabled at age, I think it was 33. His policy is definitely going to pay him until he's 65 years old. He has an inflation rider on his policy. We did the math on this. Because that inflation rider is on his policy, the policy will pay him out over $1 million more over the course of that 35 years than it would have if he didn't have it on there. So, all of my doctors that are in their 20s and 30s, the inflation rider absolute must have on there. When 40s and 50s, if you were just getting a policy, although I don't see that very much. Most people get these super early, but then that wouldn't maybe be as important. But for all of you all, absolutely, inflation rider is a must-have. Does that make sense? Just going to increase the benefit every year that you're disabled. Okay? Okay. The next rider. I guess, consider this the second most important rider to have, right behind partial disability. And that is the ability to increase your disability policy as your income increases. Disability insurance, these companies are going to insure about 60 to 65% of your income. That's universal what most of them do. They don't do 100%. They want you to have some incentive to go back to work if you can. But keep in mind that 65, 70%, those are tax-free benefits. So when you factor that in, get you up closer to making you closer to being whole, right? But they start you out at a certain amount, like I said, around $4,000, not including your student loan rider, which is fine as you're graduating dental school, and especially if you're going into residency. But then, as your income increases, you want to make sure you increase your disability policy, because you can't keep it at $4,000 once you start making more money. The key is that you have to be able to increase your policy without ever asking or being asked another health question. So if you put this rider, and sometimes it's called a benefit purchase option rider or a guaranteed insurance option increase rider, kind of the terms. you've got to have that rider in your policy. What that says is you can automatically increase your coverage, usually every year, I would say every 2 to 3 years, automatically, no matter what's happened to you health-wise. Okay? So, a really good example of this, I have a good client in the western part of the state that she's a specialist, and we got her initial disability policy, and every year I've been on her, hey, we got to increase it, your income's going up. And she kept saying, yeah, okay, I'll do it. And we had never done it after about 4 or 5 years. She called me, it's been less than a year ago. She's been diagnosed with this infection in her eye where her eyesight is going to deteriorate over time. And it's going to happen sooner rather than later. So she is 100% going to be disabled and not going to be able to practice dentistry anymore. She called me, she's like, Joe, I'm sick. We never increased my policy. I know there's nothing I can do at this point now that I've been diagnosed with this. But actually, because we had that rider on her policy initially, right, before she ever was diagnosed with anything, we were able to increase her policy. So all she had to do was to verify her income. So the companies always want you to do that, and that's usually just like sending in a tax return or a pay stub, just so they know how much money you're making. But even though she's got this disease in her eye, we were able to max out her policy, okay? They didn't ask a single health question because she had that rider on her policy. If she didn't have that rider on her policy, there's no way. They would have asked her health questions, and as soon as she talked about her eye, that would have been it. But that's why you put these riders on at first, right? So she's 100% going to have a disability claim at some point, but now she's going to get her max amount because she had that rider on. We even use this for my wife. I talked about her with her back. We increase her policy every year, or every year that we're able to. And because we did her disability policy before she ever had any back issues, they just want to know how much she's making, and they up the policy. They don't ask any questions. So that's the key. Like I said, usually you don't get healthier as you get older, unfortunately, right? So you want to lock these in at your healthiest time, which is usually younger. So, any question? No question, sorry. Okay, so those are the riders: own occupation, partial disability, student loan rider, inflation rider, and ability to increase your coverage. Yes?
Is there a fee for a rider that you have?
Yes, so each rider has a cost to it, right? So these are the riders that absolutely must have. There's other riders available. I would say on average, like, I know I always get asked how much does this cost. It depends on your age, it depends on your health. I see a lot of policies, I'll just tell you, like between $80 to $110, depending on, honestly, you have 2 options to pay the policy, and I didn't know if I was going to get into this, but I should. Most companies offer what's called a graded option to pay the premium, or they offer what's called a level premium. I really recommend level premiums, because what that means is your policy is locked in, your premium's locked in, and the price will never increase unless you add additional coverage. Once you add additional coverage, your policy price will increase, but that makes sense because they're going to pay you out more. And with all of my doctors, that's always a discussion we have. It's like, okay, you're eligible for this much more coverage. This is how much it will cost. Do you want to do it? So it's not going to automatically increase to a number that you're not aware of. You make that decision ahead of time.
When do you start making payments?
When? So, I mean, as soon as you're covered, as soon as you get approved, so you have to apply for a policy. Want to mention that, like, applying for a policy is much easier now after COVID, actually. You would have to have a nurse that would come see you, take your blood, do blood work before you get approved. Now it's all done online. It's what's called an e-medical questionnaire. That's emailed to you, you fill that out. The company looks at those answers to your questions. They approve you, and then once you're approved, you can start paying for it. I'm going to talk a little bit at the end about the specific time of your all's, second year, third year, fourth year, when you should really start looking into this. And really, disability insurance is in your 4th year. I mean, I'm talking to a lot of these people up front already. It's actually not beneficial to get disability insurance before your 4th year. You're not able to get as much because you're closer or farther away from graduation. So 4th year is ideal time. Then once you get approved, you can start paying for it even if you're not working at that time. And if you were to have something happen to you, it's gonna pay. It would pay you until you're age 65, even before you have a job. So, but then also if you want to delay the payment a little bit, I have some doctors that it's like March or April, they're a month or 2 from graduation, they wanna push that off a month or 2 before they start paying for it. Some companies allow that too. Yes?
So you said generally the payout is around 65% of whatever your income is. What if you get, God forbid, something happens, 4th year, you don't have an income, what would the payout look like?
So, again, they pick a specific income or a specific benefit amount, regardless of what you're. So, for graduating 4th year, $4,000 to $5,000 a month, before you're making any money. I mean, even if you're going into residency, you're not going to get paid. Whatever it is, they know that you're eventually going to be making money as a dentist. So they pick a specific benefit amount. And so, if something happens to you while you're in dental school, while you're in residency, before you're making any money at all, they're still going to pay you out that full amount. So it's really good. It's just one of those professions. Other professions, you have to be working a couple of years and show your income before they will give you a disability policy. But dentists, they feel like you all are going to make money, so they give it to you up front. Yes?
With that last bullet point of the ability to increase the policy as income rises, so as you increase, so your income rises and you increase your policy, are you going to be paying more per month or whatever it is for that?
Yes, so when you decide to increase your policy, so if you go from 4,000 to 10,000, at that point, we talk and I'll say, okay, 4,000 is costing you this. Once we go to 10,000, it's going to cost this. It will increase your premium. But they're going to pay you out a lot more money. So you could say, hey, maybe I don't want to do the full amount. Maybe I only want to do half of that. You get to choose the amount that you want. So you're comfortable with exactly what the premium is going to be once you increase.
Then what's the benefit with the example that you showed with the lady who was losing her eyesight? Why wouldn't you just wait until something bad did happen? If they can't ask you any health questions, why don't you just wait until something like that happened and then increase it?
Right, great question. So why did she go ahead and do that? You still have to have the income, okay? So the only way they're going to raise your policy is if you've got the income to prove to them. So there's a good possibility that her income is going to drop significantly. She's going to see less patients. So at this point, when her income's at her highest, that's when you want to lock it in. So that's why you do it now, but until income changes. Fran?
Is there a limit to how much you can raise it? I make 100,000 this year and then I make $1 million next year. Is there a limit? Can I only raise it 3x of what I have?
So that's a great question. Is there a limit to what, with a couple, there's different companies that we use, okay? So like Guardian, the company that you use, right? There is no limit, okay? That's one of the reasons I love Guardian. So your policy is what it is right now. Next year you show that you're making this. They don't cap you. They used to, but they don't anymore, which is a really great benefit. So if you can show the income, you can get that much coverage. Yeah, I mean,
How often can you increase it?
So Guardian says every 3 years, right? So actually, the very first year they allow you to increase it once you graduate because they know there's going to be a major jump there from dental school until you work. But after that, it's every 3 years. And on average, that's when most of my dentists will increase their policy. They don't do it usually every year. You know, if your income just goes up, $5,000, $10,000, but every 3 years, it's usually the time when we want to increase your coverage. And you'll never have to answer another health question. So we look at your tax return. Guardian, we send the tax return in. Guardian looks at that, and they say, okay, Fred Bechtel's eligible for this amount. You decide if that's what you want to do. So that's a great thing. There are other companies that limit the amount that you can get, but Guardian doesn't. Good? Okay. This is something I added for this specific group, because business overhead insurance is for people that want to own their own practice. All right? This is something that when you own your practice and you become disabled, all right, there's going to be lots of expenses that are still occurring, such as salaries for your employees, insurance, advertising, utilities, all these things that keep coming, and they come quickly even if you can't work. So your individual disability policy, what I've been talking about before, is to replace your income. But then if you own your own practice, you have to have a separate policy that's going to cover your office expenses. And that's what business overhead insurance does. So if you become disabled, it's going to pay you a base amount, your individual policy to replace your income. That kicks in after 90 days. Business overhead insurance kicks in after 30 days because, bills are coming quickly. So this is something that you cannot get in dental school. You can only get business overhead insurance once you start your own practice. But once you start your own practice, it's really important to have, obviously, because if something happens to you, really with the expenses of a practice, you could only make it a couple, 2 or 3 months without having some type of insurance that's going to come in and allow you to keep your practice open. Now, most business overhead policies only pay for about 2 years, with the thinking of is, if you're still not back to work after 2 years, you're probably selling your practice. So, but this is specifically for business owners. Now, the thing is, you cannot get one of these policies without answering medical questions. So, again, what I say is get all these policies as early as you can, but you can't get business overhead before you own a practice. It's something that we kind of set up, and like the day that you start your practice, your business overhead insurance kicks in. But you will have to answer additional health questions to get business overhead insurance.
When you purchase your business overhead insurance, say after a couple of years you have your personal disability and then you want to open your own practice, you answer those health questions, can that affect your personal disability insurance?
Great question. So he's saying that the original policy you get, say something's happened to you in that time frame, and that you apply for business overhead, and business overhead, maybe there's an exclusion on that policy, does that mean they could go back and add that exclusion to your original policy? The answer is no. Once you have your original policy locked in, that's locked in. That's not going to change. Okay, so there's no harm at all in applying for another policy as far as it affecting the one you currently have. Good question. Yeah. Okay, anybody have any questions about business overhead? Again, only for people that own their practice, but obviously extremely important. If you rely on your individual policy to pay your expenses of the practice, it's not going to last very long. So, business overhead insurance. Does anybody have any questions about disability insurance? Those are really the main things I wanted to touch on. Again, just talk to somebody that can help you through the process of finding the right disability policy. There are other companies out there that are other insurance companies that offer policies. It's a little overwhelming. Sit down with somebody that can walk you through the process and find the right policy for you. But disability insurance, by far, the most important thing for you all. Okay? I had life insurance up here because I get asked about this a lot as for graduating dentists. Depending on your situation, it might not be quite as important as disability insurance, but if you have assets, if you have a house, if you're married, if you plan on getting married, life insurance is really important. I think it goes hand in hand a lot of times with disability insurance because when you're applying for disability insurance, you can use those same medical questionnaire answers and use that for life insurance to where you only have to answer those questions once. Whereas if you wait, and it's usually up to 6 months, if you wait 6 months, then you have to go through the whole process again of answering the health questions. So you're going to need life insurance at one time, and I throw this in here especially to this group. If you're going to buy a practice, the lenders require you to have life insurance. They're going to want you to have a certain amount of coverage. So life insurance is a lot like disability insurance. The earlier, the younger you are, the less expensive it is. So, I got my first life insurance policy when I was 23 years old. I'm 45 now, I'm still paying the same amount, right? I had a term policy, and I'll talk to you about the differences. At this point, being 45, the premium, I looked at a new one the other day, it's tripled of how much more expensive it gets. So if you can lock that price in, it's a real benefit. And again, you're going to need a policy. So there's two types of life insurance broken down, kind of to simplify it. There's term insurance and there's permanent insurance. Term insurance, I recommend that 99% of the time to my graduating doctors. You can get a lot more coverage, like, millions of dollars of coverage, and this is ideal for people that are buying practices. Because if your practice costs $1.5 million, $2 million, $3 million, a lot of time the lenders want you to have policies at least that much. Term insurance allows you to get that type of coverage for a lot less expensive. As in, permanent insurance is usually 10 times more expensive than term insurance. But the good news is that term insurance is what you should look at, right? So it's a lot less expensive. It allows you, again, it's for a certain amount of time, so term. So it's a 20-year term or a 30-year term, but that's what most doctors get, because right now is when you need the most coverage, you have the most debt. It's, if you have family, the family's younger, it's like right now is when you need the most life insurance coverage. So just know, I think it's important. You're definitely going to need it. Term insurance is what to look for. The process of applying for a policy is exactly like disability insurance. If you decide to do them both at the same time, you can knock it all out at once. Does anybody have any questions about life insurance? I wanted to be pretty brief on that. Okay. Oh, that's going to be maybe hard to see. This is something that I brought a couple of these. This is something that we use in our office with our doctors that gives them an idea of how we can kind of cover people from the time they graduate until the time they retire. 1 and 2, it's student resident and first year in practice. Those are the main things you all need to be focused on. But when I was talking to Ryan said, what would be really helpful is the stuff that you talked about, if you would give everybody somewhat of a timeline of when you need to focus on these things. So, let's see here. Disability insurance, I put that down. That's one of the things, like as a resident student that we've talked about, 4th year dental school. That's when you need to start worrying about disability insurance. Same with term life insurance, like what we discussed, okay? Malpractice insurance, which is what John was going to talk about, you need to start worrying about your malpractice insurance right before you start working. Usually about a month or 2 is when you start working on that process. Okay, so I wanted to give you all an idea of what to focus on at what points in your career, right? And then business overhead insurance. That's the other thing, if you can see that down there. That's, again, before you purchase a practice. And same with, that's the other thing that my brother does, his part of it, is where he insures practices, right? So if you're insuring your practice, and a friend knows this, there's 3 different coverages that you need to insure your practice. You need workers' compensation insurance. That means that all your employees are covered if something happens to them. You need malpractice coverage, which is something else that you know what malpractice insurance is. And then you need basically contents coverage. So all your operatories, everything, your computers, everything inside your practice, you need coverage for that. So we have companies that specialize in just dental practice policies, that they specialize in your profession, that they include all 3 of those coverages I just mentioned into one package policy, and they discount everything considerably. So just know there are some companies out there that focus on just specific dental practices for insurance. But again, not until you own your own practice, but I wanted to bring that up because I know all of you all are planning on owning your practice one day. Yes?
Do umbrella policies exist in the dental world as far as for the business end and the practices as well?
Yeah, so John's asking about umbrella policies. And again, this is John's area, right? He can help you. But he is adamant on all of our doctors having umbrella policies. An umbrella policy is something that goes above and beyond your normal coverage limits. So you saw a picture of all those attorney slogans up there. If something were to happen to you, somebody were to get hurt on your practice, if you hit somebody in a car, once they see that you all are doctors, they're going to max out the amount of insurance coverage. They're going to look at your insurance limits and sue for those limits. An umbrella policy provides extra coverage on top of those base limits that you're going to have for malpractice insurance. So I don't know the specifics of how much they cost or whatever, but all of you all should have umbrella insurance on your specific. It just gives you more coverage and it's very inexpensive. So, Joan, does that answer?
Yes.
Yeah, it's
So
important.
there is a business umbrella, and like, I have umbrella policy for my family and home and everything we've got going on, but I don't own a business. So there is separate umbrellas there?
Yep, I mean, the umbrella policies are very inexpensive, so it's good to have a personal umbrella, and then it's also good to have one for your business also. So, yeah, you absolutely want to have that. And we just kind of include that on all practice policies. So, let's see here. Oh, I always put this at the end, because I feel like it's important. Again, I hope none of y'all ever need your disability policies. I know that, I hope I've stressed the importance of having them, but I hope you never have to use them. But if you do, I will tell you, the older I get and the more I start doing this, the more claims I've had with my doctors. If you have a disability claim, probably the most stressful thing that you've had to deal with, because you're worried about not only your health, right, but you're worried about your income, you're worried about your family. My doctors, when something happens, they text me, they call me. They don't know what type of policy they have. They just know that they've got it and they know they've got a good one. As opposed to if you're going through this on your own, where you're calling 1-800 whoever it is and trying to find out how much coverage you've got and trying to find policy numbers, things like that. It's extremely important. The dentist I was talking about that shattered her ankle jumping off a boat, I talked to her probably twice a week for 3 or 4 months, just helping her get her claim paid. There's a lot of paperwork, there's a lot that goes into it. It's super important. And just know that you need to have a relationship with somebody that you can text or call when something happens that can help you through the claims process. There's a lot of importance put on finding a policy, but once you have a policy, it's important to have a relationship with who you get that with so that they can help you if you ever need it. Okay? And also the people, when you're looking for an advisor, I think it's important to look for advisors that specialize in your profession, that know exactly what you're doing on a day-to-day basis. They understand how you get paid, they understand the type of policies you need. And really, what I've noticed is people that specialize in this market, they have contacts with other professionals that specialize in your market too, such as attorneys, CPAs, whoever it is, that they can steer you to those people, and that's very helpful as well. So just know that that is important, okay, when looking for a policy. All right, and that's our, that's John, who couldn't make it. So carrying the load for him again, as always. Yep.
I know there's quite a few insurances and coverages, and it's probably pretty variable, but can you give us like a rough estimate with all of those, coverages and insurances of what we would be paying for those?
So rough estimate on coverages. So again, like start with disability insurance.
Right.
Depending on the type of payment plan, like I recommend a level premium. If you do that, usually around $100 to $150 a month. If you choose a discounted premium, it can sometimes be a little bit less than that. But if you choose that discounted premium, know that the premium increases each year. It's fine for somebody that is going into residency, not making much money, that doesn't want to lock in that higher price, but lock that higher price in as soon as you can for disability insurance. Again, usually around $100 to $150 a month.
You can change that too, right?
Yes, so it's a really good, what I see a lot from my doctors is they start off with graded premiums. Like take advantage of the discounted rates up front.
So I
But-
started graded, and also
Right.
fixed here probably this year.
Right. So, friend, it was like, take advantage of that. You're looking for a practice. Income's not where it's going to be in a year or two. And then lock it into level. Right? So you can start with graded. The idea is if you do a graded discounted premium, that you lock it in soon. Because each year that you wait to lock it into level, the price to lock it in increases. So, I would say on average, I see about year 2, 3 is when people will lock that level premium in. That's disability insurance. Term life insurance, a lot of it, it depends on how you're approved, it depends on your age, it depends on the amount of coverage. But I will say, I just did a policy the other day for somebody that was 27. It was a $1 million policy. It's a little bit cheaper for females than it is males. Now, for disability, it's the opposite. It's more expensive for females than it is males. But that was running at around $30 to $40 a month. Malpractice insurance, you're discounted considerably your first year working. That's usually around like $600 to $700 a year. So not that expensive. It's really not. I mean, and those are the ones, really, I like to focus on priorities. Like those are the ones that are going to be most important, the most important coverages for you initially. Business overhead and all that depends on when you buy your practice because it's going to depend on your age, right? It depend on your health. But disability insurance, term life insurance, malpractice. And you know, when you sit down with whoever it is you talk to, they go over all those coverages for you and make sure that you can, if you've got a budget, we'll make sure you get the best coverages, but that, you know, your price doesn't get anywhere where you don't want it to be. Any other questions? Yes?
Can we go over the must-haves again?
Yeah, the must-haves. So the must-have riders. Let me get back to that real quick. So, own occupation, that allows you to take another job if you become disabled. Partial disability, you know, if you become partially disabled, 80% of all claims partial. Student loan rider, an inflation rider, and second most important, ability to increase your policy. It's sometimes called a guaranteed purchase option or a benefit purchase option, depending on the company you use. Yep. So those are, again, there are other riders that you can add, but those are the ones that absolutely non-negotiable. Okay, is that it?
Yeah.
I think that's all I have. Yeah. Any other questions? I hope this was beneficial. I really appreciate the opportunity again to be here. I'm proud to be part of this group. I think it's awesome. Again, can't wait to see how big this continues to grow over the years. Thank you to Patterson for having me, and hope everybody has a good night.